Today, I'm joined by Malek Ali. Malek is the founder of BFM 89.9, the business station, and FiLife, the largest online platform for term life insurance in Malaysia. In this episode, Malek talks about his entrepreneurial journey after leaving Harvard Business School. He shares how he recovered from the 1997 Asian financial crisis, what made him start an independent business radio station, and why he acquired a direct-to-consumer insurance business.
I hope you enjoy it, and if you do, be sure to subscribe and consider leaving us a review and sharing it with your friends. Welcome to another episode of In Your Best Interest, your personal finance podcast. I'm your host, Philipp Müller, and today I'm looking forward to having a conversation about entrepreneurship as well as protection in the form of life insurance, which forms a crucial part of everyone's financial plan. For that, I have the pleasure of having Malek Ali join me. After founding and leading BFM Radio 89.9, Malaysia's only business radio station, for more than 10 years, Malek has now entered the insurtech industry with his latest venture, FiLife, which acquired Malaysia's first online life insurance business. FiLife seeks to disrupt traditional distribution systems of life insurance companies by offering consumers direct online access and immediate cover. Malek's latest venture continues his career theme of bringing new products to market, which includes stints at Yahoo, Jobstreet Corp, Maxis, the Boston Consulting Group, and law firm Allen & Overy. Malek sits on the Asia Pacific Advisory Board of Harvard Business School, where he earned his MBA. He's also a law graduate of Bristol University. Welcome. Malek, how are you?
Fine, thank you, Philip. I'm great. Thank you very much. Sitting here in Singapore talking to you, and you're in the US, I understand.
Yes, at the moment. So yes, but hey, podcasting makes us being available anywhere, right?
Yes, there's a beauty of this pandemic. Actually, one of the bigger things that is advantages amongst many things that disadvantages.
Yes, many disadvantages, but like you said, like also many good things came out of it too, and I think having the freedom, or like going forward, there will be a little bit more freedom for people to probably work from anywhere, as long as work gets done, right? Which I do want to get to in a little bit when we talk about how you're managing during this pandemic, all your different businesses from being in Singapore, while most of them are actually over in Malaysia. But before I go into this, reading through the bio just now, right? You've done quite a lot of different things, from going from a law degree to Boston Consulting Group to various, tech companies at some point, to then creating your own businesses. Did you always were you always entrepreneurial, or was it something that maybe, was built by going to Harvard Business School, or maybe that was something that was instilled to you at a very young age when you just grew up?
Yeah, it was inculcated when I was very, very young. My father was like a businessman himself. Kind of like net. I think was he successful? I guess I think he was successful at times. He was, but there were very difficult times too. So I saw through all that as a teenager actually. It was part of my world to see the ups and downs of business. And I think doing law and going to business school, I think that doing law was something which was a bit more like kind of like building up skills, right? I didn't know that at the time. I think I just kind of like said, my father wanted me to do law. I said, okay, does it sounds interesting? So I did law, but at the end of the day, I knew I would get back into, at some point in time, I will go back into sort of starting businesses and startups and so on. So it's in the blood.
So you've really thought about this already at a young age then, even though you said, there was also some setbacks, which do occur in running a business, right? That you've seen, but they didn't distract you.
No, it didn't. My father lost most of his life savings, I guess, with one particular business which got hit by we call in Malaysia, we had a recession at the time, 1985 recession. It was 1985. The stock market crashed, and I was just about to go to university. And I guess my father said, Malek, I'm not sure I can afford your university in the UK. You have to apply for some loans to fund your education. So that was a realization that business is not just up, but it's also sometimes a big down.
Big down, yeah,
Yep.
for sure. So how did you manage then to get to university in England? Were you able to secure some scholarships?
Yes, I managed to secure a loan from the Malaysian government, and it was a fantastic loan because what happened was, it's like, it's if you get a certain grade, you don't have to pay it back, right? So in a way, it's a semi-scholarship that incentivizes you to do well. If you don't do well, if you fail, you have to pay the whole thing back, right? So it's a bit of like, so you better do well, and yeah, it's a bit of ironic, right? So if you do well, you tend to get better jobs, and you don't need, and you probably have the means to pay back the loan. But if you don't do well, you don't have the means to pay back.
No,
the
but
loan.
I think it's a good what's the word? It's a very good dangling the carrot in front of you. Hey, look, you need to
Yeah,
do good, right?
yeah,
Yeah.
yeah. This was all before nudge economics, right?
Yep, exactly.
Yeah.
No, this is awesome. Okay, so you make it to England,
Yep.
and then from England you start your law career,
Yes.
and then you're heading over to Harvard Business School. Obviously, very reputable school to go to. What was what was the process like getting in, and even making that decision of going to business school?
Yeah. So, my first love was to do, as probably do something either business or economics at undergraduate. But since I did law, I thought getting going to Harvard Business School or a reputable university like that to do the MBA, especially stateside, especially in the States, I thought was really, really important. I think because I looked at the business programs in the UK, and at the time in Europe, it was fairly conservative. I mean, it felt very academic. Whereas the programs I saw in the States were much more, at least when you look at the prospectus and so on, I found it very exciting. I was like raring to go and do these programs. So I applied, and I was very lucky. I managed to get into Harvard Business School. I got rejected by Stanford, got rejected by a few others, but Harvard said yes, and off I went. So it was a fantastic 2 years. I think it was. I actually loved the positivity, the enthusiasm, and also what was called, living vicariously through the experiences of others. Because you have 90 people in the class, you're broken up into groups of 90 people, and what then happens is that you discuss something called cases, and cases are, this sort of 40 page basically synthesis of a particular business problem, of a particular company, of a particular situation. And I think in trying to solve those problems, and we did 3 every day, and in trying to solve those problems, you're actually stepping in the shoes of a problem solver, of someone who's facing these problems, and you have to figure out how to solve it. And I think doing that 3 times a day makes you kind of like, in a way, it's kind of like accelerates your learning, because you no longer have to figure this out when you're on the job. You're doing this semi-academically, but you're actually living the shoes of that person, of the protagonist, for 2 hours at a time. And I think that was fantastic. And sometimes the protagonists, the people who the case is right about, are in the room, right? They actually are sitting down quietly in the corner, and you don't know who they are. And then at the end, after you've bashed the protagonist, you kind of say he did this wrong, he's stupid, is this, is that, and he didn't look out for this, and then suddenly you turned up and he was there right in front of you and saying, "Okay, hi guys, I'm so and so, and yes, you are right, but etc." So that is a fantastic experience, and I think doing that actually helped me with sort of, in a way, get more experience than I actually had. Right, that was the beauty of it.
No, it's a great process. The school I went to in the Netherlands actually uses case studies exclusively as well, based on that concept as well. I thought it's one of the best ways to learn for me.
Yes.
At least it's maybe not for everyone, but I think it's amazing because it actually makes you learn real life things instead of just by the book, right? Everything
Yes.
by the book, very dry.
Yes.
The experience is amazing.
Yeah.
So you went to Harvard Business School, you graduate. Are you already making your way back to Southeast Asia, or are you still in the US afterwards?
So I wanted to stay in the US. Unfortunately, because because of the fee structure, etc., I had to get a certain type of visa that doesn't allow me to work in the US afterwards. If you remember, I graduated in 1995, and many of us during that time were excited about Netscape listing in 1994. And that was, I remember sort of a professor coming. The courses were starting to build up. The internet courses were starting to build up when the excitement was about internet. Well, at the time, we didn't know what was internet 1.0. It was just internet, right?
Yeah.
So if I had the opportunity, I would have actually gone to Silicon Valley straight after graduating. But I wasn't able to legally, so I had to leave the US, which I felt, never mind. At least I'll go back to Malaysia and see what I can what I can do there.
Yeah. No, interesting. So yeah, I was going to get there because that was the time of the brewing dot-com bubble.
Yes.
And I think now when we get to your latest venture, being a fintech or insurtech in that case, your first experience and exposure, you're right there, right? You said it's getting started. You went to Kuala Lumpur. I think you're working in like classified ads and especially with Jobstreet.com, which is like an online recruitment service, right?
Yes.
So you had first during the dot-com bubble. So how was that experience then? Working for a company like that?
Yeah, so in fact, even before that, we're doing this classifieds. Actually, my biggest battle scar, actually, which is it's almost like in proportional terms. I talked about my father losing his life savings in one era. I also had that experience in 1997, and it was something called the Asian financial crisis.
Yeah.
If you can,
I think most of the listeners here that are local to Southeast Asia will still remember, or at least if they ask their parents, right?
yes,
They will still be able to remember that. Yeah.
yeah, and what happened then is that whilst the US was kind of like booming, right, in a way, Asia was just crumbling at that time. I think Thailand, Malaysia, even Hong Kong had to come out and fight and try to keep parity their exchange rates with the US dollar. What happened was that a lot the financial markets collapsed. And in the same way that GFC affected the US, it was prior to that, it was the AFC. And the similar experiences that US went through, kind of like very similar experiences that we went through, in the sense of that property markets crashed, there's no liquidity, people cannot buy, people cannot sell. I mean, meaning things like property, people cannot buy property, people cannot buy cars, cannot afford to, people can't sell. Liquidity stopped because loans were jammed up. So we had that really difficult situation at the time. And my business was in classifieds, and classifieds depended on the volume of trading and people buying and selling. And that business just collapsed within 1 year. So it was very sharp,
Yeah.
sharp learning, very quick learning, sharp. And I ended up, at the time there was, to make things worse, there was not really a venture capital industry in Malaysia at all. So I had to borrow from the bank to start my business, and I was literally, I was literally about 100,000 US in the red.
Yeah. And that's stressful.
Yeah.
That is a very stressful situation.
Yeah, I had 100,000 US in the red. I had student loans of about another, another 100,000 US. So yeah, it's kind of like, wow, this is really rough.
Yeah, no, absolutely. So then you go to jobstreet.com, right?
Yes.
So this is a .com company. In 1999 you start. You stay for 4 years.
Yeah.
Was it something you were seeking out, or was it something you just had to get a job? But were you interested in the whole internet?
Yeah,
What was it?
Yeah, I was hugely interested in the whole internet thing. In fact, the classifieds business was meant to go in. That was the play to go into, to convert it into internet classifieds and then to go on from there. But since that, I couldn't get past first base. An interesting thing happened. I knew the founder of Jobstreet. We worked together on a couple of projects when I was running my own business. When he found out that my business I was going to close down my business, he turned around to me and said, "Malik, why did you join me?" I said, "I'd like to, but he says, he goes, I'll pay you a salary of 1,500 US a month, right?" And I'm like, Mark, I can't. Mark Chang is his name. I said, Mark, I can't. I have to pay back this, 100,000 US dollar loan, and I have to go down to Singapore and the ringgit is not valued anymore at all, so it's not exchangeable in any currency at the time. So I need to go to Singapore and earn some hard currency and pay it back. So Mark left it at that. But I got a call a week later when he said, Malik, just turn up for a meeting, just meet some of my founders at Jobstreet. And so I met them, and it was a very odd meeting. It was like, it was questions not about, it was questions about philosophy, about my values, if, very little on the company and what I wanted to do with the internet and so on. But at the end of the meeting, they said, Malik, you just step up for a second. We just have something to discuss, and then you can come, and then come back in. So 10 minutes later, I came back in, and a gentleman, one of the co-founders of Jobstreet, a gentleman called Kayib, turned around to me and said, Malik, I'm going to make you this offer. He says, how much is your loan? And I said it's about I said something like 70,000 US. I was too proud to say the actual number.
Yeah.
And he goes, why not I pay off your loan for you? You join Jobstreet. And if Jobstreet does well, if we don't fire, if you resign by yourself, you have to pay this loan back. But if we fire you, you don't have to pay this loan, right?
Okay.
And I'm like, wow, here was someone who was, kind of like able to sort of solve immediately a huge issue that I had, which was this loan overhang over my head, and literally gave me a check for 70,000 US, a week later to pay down my loan.
Wow.
My biggest regret is not doing this thing. Honesty is the best policy, right? My biggest regret was not telling him, hey, I actually have 100,000 US.
Yeah, exactly.
Not 10,000 US. But that's okay. Hey, wiping off 2/3 of your loan just like that made it great. And
that's amazing.
Yeah, it's amazing. It's an amazing story, and not only that, so I got some stock options as well. And those stock options continued on until Jobstreet listed. So that was where I made my first little windfall, where I could at least windfall 10 years later, I guess, where I could, sort of buy my first property, right, and have a home, So
this is what I always tell people, also the listeners, right? It's like you want to hear from people these stories, that it's not always set in stone when you go to university what subject you pick, your first job, right? Life happens.
Yes.
And some of it is controllable, some of it's just not.
Yes. And the thing is, it sometimes is how do you respond to those things, right? That's more important. That's more defining. And I must say, to a certain extent, I was very, very lucky. Right place, right time, right people. And Cabe is now my investor in FiLife. He's an investor in BFM. So we're now business partners after all those years. And now and in the same way that he looked out for me, I think we look out for entrepreneurs who are in, sort of also in the same situation, in a way I'm paying it forward, right? And kind of like saying, hey, we can step in, and what's your problem? What are your issues, kind of thing, and step in. And I realized in entrepreneurship, business plans are one thing, but, the biggest problems I find I had to resolve on behalf of other entrepreneurs is like relationships with their co-founders, relationship with their first investor, how to extricate yourself from a very tough situations like that, and or situations where they can't, entrepreneurs are basically, sort of really struggling personally, but also, but their company is also struggling, so they're struggling on both fronts. So how do we make it structured so that, they don't struggle personally, right? Give them a decent salary that can cover costs and a little bit, and then but by raising funds for them and so on, and then and then sort of and then they can really concentrate on the business. So I think that philosophy of just looking at the human opposite you when you're investing, seeing what they're tough, what's the cloud that's hanging over their head. I think because I'm paying it forward right now. In recruiting employees, I do the same thing. I look at the cloud that's hanging over their head, and you try to resolve that as much as possible.
Yeah, no, it's super interesting story. I really appreciate you sharing that with us. And this gets us really close now to today's world. But there's one more step, or actually a couple. We'll skip a couple of the other tech companies that you did for a few years. But how do you go from Jobstreet, you work there for a few years, you do a couple other tech companies, and now you do a 360 almost, right? And you're starting a radio station.
Yes.
A traditional radio station. So BFM 89.9. So this is super interesting to me. And I have not asked you this in person. So what was the driving force behind that?
So this came again from something blast from the past. When I was a university student, I was fascinated with radio stations, particularly radio stations coming out of the UK. At the time, radio stations in Malaysia at the time were very staid, or this part of the world really was very staid, generally government owned, boring and so on. And suddenly I went to the UK and I was like giggling like a child, at all the jokes and so on, like kind of thing. So radio became very much a thing I look forward to when I'm in a car, and you're a student. You're not often in a car as a student, right? But when you're in a car, you're like, well, let's listen to this Capital Radio at the time. It's London 95.8. See, I can still remember the signature of the radio station I listened to. So I think that always was a little fire. But I guess when I did all this, and when I first came back from Harvard Business School, I explored the idea. But there was a fellow Harvard Business School alumni who had the license to operate 6 radio stations at one go. So I thought, okay, here's a billionaire, and here's you, a young graduate. Forget it. Don't compete with him. But interestingly, 12 years have passed, and I've done my tech thing and so on, and I suddenly realized that radio has become very, very staid again in this part of the world, because it was just the classic entertainment slapstick stations, a lot of trivia, he says, she says, battle of the sexes. And it's like, oh my gosh, is there anything, can't we do something better with this fantastic medium, which people at least in this part of the world, they were listening to because they were in the cars a lot. Cars and a major mode of transport. For a lot of people in Kuala Lumpur, in Bangkok, in Manila, right? So I explored that idea and said, okay, why not a business radio station, something which is substantive, something which is interesting, and it actually capitalizes on my own experience. Harvard Business School, the business principles, and I wanted, but the whole purpose of it was to raise this kind of like, in a way, get Malaysian companies and Malaysian managers and leaders really to be able to compete on the global scale against your global competitors, right? Raising that knowledge. So because I felt it was really, the business that we were learning in Malaysia at the time was just very academic. Again, right? Remember, I talked about business education being very academic. Until I went to Harvard Business School. And likewise, I felt that business education in Malaysia was very academic. Let's raise the game by having a radio station. So, cobble all my ex-Jobstreet investors, ex-venture capital company that, sort of invested in Jobstreet, and managed to get a license, which is really hard to get, not very easy. That was the toughest part. And got one frequency, which was, thankfully, was for the capital. Kuala Lumpur, and then we launched, and there's one thing about me. If ever I launch a new business, I think I should do a podcast, because what happens is that markets tank immediately afterwards. This time, so remember the first one was the Asian financial crisis, right?
And now you did September 2008.
What happened in September 2008? Oh man,
I was doing an internship at State Street in the asset-backed securitization business. That was hell that summer.
Yes, indeed. And Lehman Brothers went down 11 days after BFM launched. So that was, again, baptism by fire. And I'm sitting at my desk going, oh no, here we go again, but a few learnings. You're older, so I immediately, what I did was just to kind of like cash up in terms of like I sold my the property that I had, just to make sure that in case we needed more capital injection, all the projections got pushed back for another 2 years and all that. But thankfully, in the same way, kind of like the global financial crisis did not hit Asia as badly. Things rebounded pretty much after about 10 months out
and
in
plus,
Singapore.
having a business station might be actually interesting for people to listen to, because they're worried or they want to learn about what's happening, right? I think that actually might have even played also into that.
That's right. So on the content side, yes, but on the, I guess, the lifeblood of the advertising
you still need
side,
ads, right?
Yeah,
you still need
ads.
Yes, exactly.
Yeah. So yeah. So BFM. We started in 2008, and yeah. So I think that was a bit of a sort of worrisome first 2 years. But I think by 2011, I think I knew that, hey, we're onto a good thing here, and we managed to turn around the business. I mean, in terms of like being cash flow positive, I mean that's every entrepreneur's thing, right? To get a business cash flow positive. I mean, Stashaway or whoever, FiLife, once we get to cash flow positive, you can actually just breathe a huge sigh of relief.
Yeah.
It's a huge milestone. So that came cash flow positive probably early 2011. So then it was just actually just about sort of, in a way, the people were okay. I mean, the listeners were fine, the advertisers were fine, all that was going good guns. We just had to worry about the Malaysian government at the time, which didn't like us talking about new areas. Interestingly, if you look at business media tend to follow the money, and when the money goes into politicians' pockets,
then it's not a good.
Politicians get upset. Yes. And as you can tell, the biggest story of that decade for Malaysia was 1MDB. It'll become a movie.
They're still seeing the repercussions of that still today, right?
Yeah, I mean, if you want to see a Wolf of Wall Street in real life, that's Wolf of Wall Street in real life. In fact, the irony is that Wolf of Wall Street funded by 1MDB. So I think I'm looking forward to that Michelle Yeoh's production company is going to do that movie. I'm really looking forward to it. I've read the books, and it's fascinating.
Yes, I read them as well. It's pretty mind-boggling. Yeah. But then now we can really switch gears. So now you're marrying your early tech background with your business investment kind of focused radio station, and you're creating an insurtech company.
Yes.
How did that come about? And also tell the listeners maybe a little bit about what FiLife actually does. Yep. And then I actually want to talk more and deeper into why life insurance is important and what kind of your thoughts around it that are.
Okay. We call it Fi, as in like Wi-Fi or hi-fi, FiLife. And literally we are, right now, we're in the distribution space. We distribute life insurance online and directly. So basically you can buy term life insurance online directly with FiLife, and we distribute products by, currently an insurance company called Tokyo Marine, but maybe in future other kinds of insurance products. But we're starting out with life first, and you can access it online. So the reason for going into insurtech, or rather fintech generally, for me is as follows. My favorite time at BFM was just to sit in our pantry. And then we have a flagship show called The Breakfast Grill, where we grill CEOs and business leaders and political leaders at 8 a.m. every morning, right? And what I normally do is to sit in the pantry, and after they've had the grilling, and it is a grill, they come out looking a bit shell-shocked and looking, some of them are a bit, okay, but some of them are a bit like, they need an arm around them and saying, okay, it's okay, it's not a problem, you did well, and I used to serve them coffee and sit them down in the pantry, and we used to talk, right? And what was really interesting for me is to see that, these were, I guess, the captains of industry in Malaysia and elsewhere. And they were great at sort of managing, some of them were great at managing other people's money, shareholder funds and all that to bring the company forward. But as far as their own financial well-being, I think a lot of them were a bit ignorant of it, actually. I mean, the knowledge actually was quite appalling. I was like, wow, here you are managing all these funds for other people very well, competently, but just for your own personal stuff, you're just like, you're kind of like expecting, things to happen automatically, or you don't, one CEO even said to me, Malek, and he's Malaysian, and he goes, how do I invest in the US stock market? I want to get access, but I don't know how to get access, And basically, these guys just don't have time. They're just so focused. It's just like that doctor, right?
Yep.
That doctor that is great at managing his patients, but not so great at managing his own health. He smokes or something like that, right? Yep. So I think that was the inspiration really about sort of trying to the inspiration behind getting into fintech. And why insurtech? It was because I needed a way in. into that space. And there was a fantastic, there was a great advertiser who came on board which was an insurance distribution company called FiLife. They were owned by Hanover Re and another software company, and they were launching a direct-to-consumer life insurance. And that was when I pricked my ears and said, "My gosh, this is exactly the kind of product that we need for this local market." I like, good luck to them, because I wish I had done it. I wish I had thought of it myself. But these guys are doing it, and they're buying advertising on BFM to do this, and they are sort of operationalizing it. And then 2.5 years later, I think there was a change in strategic direction, and Hanover Re and put up the company for sale. And then I got wind of it and said, if I wanted to have a space where we can get into the area of financial wellness and financial education, this would be a fantastic place to start, because it is probably the most misunderstood sector in Malaysia, at least, and I know in a few countries as well.
No, I think it's in a lot of places, right? Like I talk to a lot of people. My background is in financial planning, and I always, every financial plan has to have some kind of insurance included, right?
Yes.
And then especially coming. So I lived in the US for 12 years before coming to Southeast Asia, and I was appalled when I saw the fees on the investment side, right? But
crazy.
When I came and then sat down with the first few clients and just to see, reviewed some of their portfolios, and I always mention this in our financial planning talk as well. It's like I sat down with one person, very smart. He had 28 different insurance policies, and he was still underinsured.
Yes.
Because he bought a little bit, 10,000 from this guy after school, right? Then a little bit in national service. Then from this guy, he got sold something. So, but it's still underinsured because he did really well. He bought property around the world, so that with loans though, right? So I think very misunderstood. That's why I wanted to have you on, because I know you understand this inside out and you're passionate about it. So how do you guide then people when it comes to insurance, right? Like, how do you tell people, what should they look out for when they first pique their interest, or someone comes up to them and says, "Hey, look, you should buy some insurance"?
Yep. So to me, it is about insurance is about protection. It's not about investments. And I think that's the crazy thing this part of the world. People buy insurance for investments. And I think that's why the gentleman that you mentioned about 28 policies, he was, he was buying it for pretty much, in investments. I mean, and this is, I guess, the market has educated, or rather, the insurance companies currently have educated people so much about about the fact that insurance is about something for you for a rainy day that you can put away, and all that is about savings and investment. It's not about protection, really. So what tends to happen is that you get this sort of combined package products that has combination of a bit of insurance and a bit of investment, but guess what? A huge portion of fees in between, right? So,
Yes.
So which mutual fund manager or unit trust manager charges kind of like a sales charge or a distribution charge of 40% of your first year contributions, and then second year another 40%, third year another 40%, fourth year 20%, that drops down to 20%, fifth year 20%. If you had a fund manager charging those kind of things, you'd be like kicking him out of the room, right? You just say,
Yeah, absolutely.
Yeah, that's what happens, right? So that's what happens when someone sells you something that is both insurance and investment packaged together. Is that and then I think what consumers like is the simplicity. The simplicity is this: it's like here's $1,000 a month, right? And I don't have to worry about it. All I have to make sure is that I have to pay $1,000 a month, and I get some I get some protection and I get some investments, but you don't really look into the detail of where does this 1,000 go? Actually, this 1,000, a lot of it in the first 6 years goes a lot to the person who sells it in front of you, right? The person in front of you who sells it to you. And I think that's the irony of all this, is that's where, and the industry is not, it's seen as like, hey, the words I get back is, oh, we have to do this, we have to distribute to via agents, and because insurance is sold and not bought, right? That's the adage that people use. Insurance is so normal.
I always tell people you should always buy your investment or protection products, right? You should never be sold them.
Yes, exactly. And I think um, and I think the greatest thing, the biggest sort of disservice we do to ourselves here in this part of the world is basically selling combined savings and investment products, which attaches the same sort of fees that to the investment product as well as the insurance product. You know what I mean? So
Yeah, absolutely.
uh, so
And I think the thing is that the whole thing about, I think what you said in the beginning is, everyone should take a step back. You look at your overall financial plan, you have investments and protection, right? And
yes.
they should be handled separately, right? You're buying car insurance because you're wanting to insure the risk of being in an accident or whatever, right?
Yes.
You should think about the same thing with your life insurance, right? You invest your money for retirement,
Yep.
but you can buy insurance not as an investment to it. It's best when it's seen separate, right? You get the best fee, the lowest fee, if you do it separately.
Yep.
So let's say someone comes up to you and says, "Hey, Malek, look, I'm torn in between, buying this term insurance products, which you can maybe explain a little bit more the differences, and this whole life insurance product, right, which gives me also some money at the end, because with the term product, I'm not happy because I just pay money and then I don't have anything at the end, right? That's usually the question that comes up, and why people still buy a lot of times these high cost insurance products.
Yep. Right. And my response to that is actually, if you buy term, it's a lot cheaper than buying. The premiums you pay is, between sort of 20% to depending, right, of your what you would normally pay if you were to buy a combined product. And why don't you take the 80% of what you save and put it into an investment, right? So that's the idea. Do you break it out so that you as you do buy term, you want a simple protection thing. You want to say like, okay, if something happens to me, I need $1 million for my family. And if nothing happens to me, that's a good thing. I can still support them. I can still take care of them. But if and I don't get any and that protection that I pay, that premiums I pay in case something happens to me, that doesn't get refunded or get and so on. Actually, that's a good thing, because you're alive. You're alive, and you can support your family. It's only you pay this, just like anything. It's you don't pay for car insurance because you want to get the money back, right?
No.
You pay for car insurance in case you had and you don't really mind you don't pay car accidents for that $100 damage, right? You pay car insurance because of that that situation where you injure someone else or the other car gets hit and it's your fault, etc. So it's a big amount and it's going to hit your finances if it hit you big amount. Same thing with life insurance. It's like you pay for that, not to kind of, hey, I want my money back. Hey, you can do investments for that. You buy life insurance because it's if something happens to you, your family is safe. And I think that's the simplest derivation of insurance. You've been in derivatives market. I've been a lawyer in the derivatives market. It's really complex. You don't want to get complex products. You just want to get really simple products. And guess what? And guess what? The rest of it, the beauty about today's fintech world, the rest of it that you save from not buying this sort of loaded, very expensive investment linked policies, we call them, is take that money, take that 80% savings, and put it. If you really don't know, a unit trust which has no sales charge and a reasonable management fee and does reasonably well, or buy your exchange traded funds, or you can buy SPY, which is Standard & Poor's 500, or you can just these days you can actually fill out your risk profile with a digital investment manager like Stashaway and like others, and fill out your risk profile, fill out your goals, and then just put it there, and put it.
And I think this process is getting easier, like you just mentioned, right? Like there's many ways that you can do it, but I think that's exactly why still people buy whole life, right? Because it's then maybe it's safer for themselves that they're forced to save almost, right? Because they make their premium payment. Instead of, hey, I rather pay less, do a term, but then I have to go find something else to put that money in. But internet, like you just said, the whole fintech space, makes everything so much easier and accessible to anyone, right? Even if
Yeah.
you don't have knowledge. It's
Yeah.
literally like a Google search away probably by now.
Correct. But I think the fear is real. The fear
Yeah.
of the unknown, the fear of investing is very real. I interact with a lot of personal finance groups and parent community groups and all that. And the fear of investment is so high that people are willing just to like abdicate that responsibility to an insurance company, right?
Yeah.
Without thinking through like this is really this is really not a good choice.
Yeah,
you know,
yeah.
yeah.
But
So
how do you get around? How do you get around then? You're a new player in the market, right?
yes,
New name, new company. Yes, you do use an underlying underwriter and their products, but
yeah,
how do you guys get around that? Because I'm sure these big old insurance companies, they build up a big reputation. They're very liquid. They have very good. Some of them have very good ratings for payouts and things like that people look for.
yeah.
How are you guys going about that then? Because like you just said, right, people are afraid of that unknown.
Yeah. So I think we have to go from ground up. I think what you see FiLife doing is we're going into the parents' forums. We're really going very deep into, very, very kind of like deep into the ground, right? In terms of sort of spreading the word about don't be too afraid of investments. There are these other guys who can do the investment side, but hey, insurance, you can get it for really cheap. And what we do is we have little campaigns that say, you know what, how much do you think 1 million ringgit, which is about 250,000 US, which is a big number in Malaysia. How much do you think a 1 million ringgit policy costs? And then we have a guess the premium, and people kind of like say 300, 400, and when we turn around to them and say, oh, it's only 100 for a 32-year-old woman, they're like, what, really? So that's the kind of ground campaigns that we have to do. And it's not campaigns as like a structured campaign. It's all about just being there as on forums and all that, just to kind of like chip in, right? I think the difficulty is that sometimes when we do chip in and give comments on like the pricing and all this, what we find the greatest pushback in some of these comments, and is from agents, who have I guess whose rice bowl is going to be affected by all this. And I see every time we kind of like help consumers try to make sense of this. Sometimes I'm just a little bit annoyed, I must say, at sort of who are the agents who come in
Yeah.
and make the whole thing murky again. Like, oh, but you can't get this, you can't get that. I'm like, you start again, right?
Yes.
So basically, it's almost like a battle for the minds of consumers on social media. So yeah, so I think
I think the education part is huge, right? I think that's why we go out there every week, right?
yeah,
Webinars, on the ground events, just being there, educating people about what's out there, and then have them do that decision. In the end, it's their decision,
yes,
but at least get everyone as educated as you
yeah.
can possibly can. I think is the best way forward there.
But
So
here's the thing,
yeah.
though, Philip. What I would say is that as an entrepreneur, sometimes there are ways in which you try to change people's thoughts and opinions. But the better way actually is to, in a way, ride on what they believe in, right, and offer products that kind of like takes advantage of what they believe in a little bit. So, for example, let's talk about investment linked policy, right? Investment linked policies are in 54% of all, 54%, maybe even more, of all policies. Sorry, I think it's in excess of 60% of all life insurance policies sold in Malaysia. Investment linked policies are subject to all this sort of huge fees, right? As I said before. So if that's the case, then I think there is an opportunity to still offer. I mean, there's still an opportunity to work on this concept of investment linked policy, but have a differentiated product, right? And I see, interestingly, in Singapore, I see a bit of it's happening a little bit. I mean, I see, for example, Sing Life offering, money market product. So they're getting their feet wet a little bit in that kind of like that thing. I haven't seen any policies that takes advantage of that, but I'm seeing this sort of movements towards sort of offering the consumer what they already know, but without the disadvantages.
Yep. Yeah, and I think the consumer gets educated. I think the internet is a big equator, right? Equalizer, actually, in the world over time. I totally agree. So one last thing, when it comes to the insurance policies, right? Because we covered already most of the things that I wanted to talk about, is though a lot of times, when people misunderstand also term insurance, if you buy it online, can you actually add any riders on there, right? Like critical illness or long-term care, right?
Yeah.
Because that's always on people's mind as well. Hey, what happens to me when I get critically ill? I can't provide for my family, but I'm not dead, right? So
Yes.
the insurance policy is not paying out for that.
Yeah.
Would you say that people, and then do you guys offer it digitally, these riders, and then, or would you say people should buy these separately?
So we offer it as riders. So the nice thing is, like, for example, if you were to buy, people say that, I mean, you're a financial planner before, so what that the worst thing that can happen to you is not that you die, is
Yep,
that you are a vegetable, right?
correct.
Because then you have to take care of yourself, your family has to take care of you,
Hmm.
and then they don't have money for themselves. They need money for themselves as well, right? And not not all of us are Michael Schumachers, right? That can have
Yep,
this huge wealth that can
correct.
support that. So I think what we do is that then we take the decision to say, look, our policies actually are packaged together with disability, total and permanent disability, so that at least if you buy 1 million ringgit worth of sum assured, you get 1 million of both. If something happens to you when you're disabled, permanently disabled, or you die, right? So that's
Yep.
one way of covering. Basically, you package it together so that people don't have to make that call. I think we can, if we wanted to, we can separate it out, but we thought that, hey, this is prudent. The
Okay.
other thing that we put in, and this one we do it as a rider, but again, insurance companies can choose how they want to do this, but we put it like, okay, if you get cancer or one or four critical illnesses, and you can go up all the way to 36 if you want, with other companies. But if you get one of these four critical illnesses, you can buy a rider of an extra premium or so much, and you can get what we call an accelerated payment. That means if you buy $1 million worth of life insurance, you can get sort of 250,000 of that can be accelerated if you get cancer,
Mm.
and then you get that paid that, and then if then you don't recover cancer and then you die, you get the balance of 750,000. So there are, but I think it is open. So that's our product at the moment. But I guess as we go forward and kind of like enhance it and so on, I think we'll get to the stage at some point where you can actually choose. Okay, I want 1 million worth of life. I want 1 million worth of total and permanent disability, and my premium adds up every time like a little calculator. And then I want 1 million worth of critical illness. Add that up to your calculator. I think that is eminently possible. The underwriting for that is actually standard. So it's just a question of putting it as a consumer choice online.
Yeah, no, thank you for dropping this information. I think a lot of people will be able to, go back, see what they have right now, or if they're already looking for insurance, just have a clearer view and like hopefully do their own research
Yeah,
on top of what we talked about today to learn more about this, right?
yeah.
Um,
I would actually strongly suggest. I mean, the biggest thing for me is and the craziest thing is like when you ask people, okay, let's start. So, what insurance policy do you have? And suddenly the answer is like you get a blank look, and it's like, I think
yeah,
I think I have this, and my parents, at least in Asia, my parents bought me this, but I don't know what exactly it is. And my aunt asked me to buy this and that, and then so actually that first piece is actually knowing what you have. I think that's so critical. I mean, like it's like this guy you talked about, this 20 here who has 28
yeah,
policies, right? He has to first spend a day kind of like retrieving all those policies and just having a little spreadsheet and or piece of paper and a table and just writing down how much is sum assured, how much is a cash value, how much is this, how much is that, to just
yeah.
understand what you have. I think and sometimes I think people find it really hard, and I really recommend them to. Financial planners are not for the are not for the wealthy anymore. I think in Malaysia, for example, you can get a really good financial planner, independent one, for
Yeah.
about who can look at your stuff for about 700 US.
Yeah.
So and that's if it's less than a month's salary for you, it's well worth
It's
it.
money well spent. I think
Money well spent.
exactly. I think it's coming more and more. It's kind of look for an independent, maybe fee-only advisor that can really set you up once. Because I think that's the thing, like you just said, that, getting, set up with a spreadsheet, know where your things are, it gives you so much more peace of mind, right? Like it will say, okay, I'm on track, I'm not on track, where can I, improve? What policies do I actually have to review them?
Yes.
So I think, you're absolutely right on this. So
it's so nice, such a nice feeling to get rid of, like, sometimes you to say, look, I'm going from, sort of 28 policies to this three policies that are fantastic for me. The rest I can just disband and, whatever and things like that. And now I'm streamlined. I pay only these 3 folks, and I have my investments, and everything's going hunky dory. And then you just continue your professional life and don't worry about this anymore, right?
Exactly. No, I think that's always the biggest outcome of any of the financial planning I've done so far. It's always, we knew some of the things, but now we kind of like have it in place, and I don't have to worry about it all day, every day, right? Yes. So getting on that. So hey, Malek, thank you so much for your time. I know we've been talking for quite some time, and I think we can fill it up with even more, because I did have some more questions around investments and what you're excited about in the future. But I think maybe we can do a second round next year and talk about a few more other exciting things, because I know you do like to invest in startups, as you mentioned earlier. So that would be amazing to hear and to learn more about your reasoning and thinking behind that as well. So once again, thank you for being with us today. Really, really appreciate it.
Very welcome, Philip. Really enjoyed it. Thank you.
That's it for the show this week. Thanks for listening. If you like what you heard, subscribe and leave us a review. The reviews really help us, and we love reading your comments as well. In Your Best Interest is hosted by me, Philip Müller. We're produced by Stashaway, and we're mixed by Mo Ramley. Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the Stashaway app. It's available in the Apple App Store as well as the Google Play Store, so you can start on your financial journey right now.